Okay, hi everybody, welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. I'm just hopping back on here. It is July 5th, 2026, and I'm just jumping back on here to recap some of the price action that occurred this past week, primarily on the S&P 500, and then give you an update on my position. So let's go ahead and jump right into this because there's a few things that we're going to cover here since last week did coincide with the end of last month, which was the month of June, and then I also had to reestablish my position and set that for the month of July. And so there's a few things that I just want to cover here. I'm going to go ahead and zoom in right here on my screen from the close here on the E-mini futures on June 26 to where we closed on Friday of this past week. Okay, we closed at 75.52.75. Now, last week we did have a holiday weekend, of course, July 4th. We celebrated that. And in case you weren't aware, equity markets were closed on Friday of last week, but futures contracts continued to trade for a half a day on Friday. So what I have marked here, noted on my screen, is where we actually closed after half a day's worth of trade on Friday of last week. So we closed at 75.52.75 on the E-mini futures here, or the S&P 500 futures. So the market is open again, the futures are trading, and so this whole candlestick will represent both half a day's worth of trade that we saw last Friday, as well as the move that we're going to see into Monday, which will be tomorrow. So holiday weekends are always a little bit oddball here, and so but that is what's going on the screen here for a week to date move from the Friday before last to this past Friday. That was a move higher on the S&P 500 of about 2.1%. So a pretty large move for a 1 week move here on the S&P 500 futures. And that move is going to coincide with the S&P 500 index as well. Now, Tuesday was June 30th, so the thing that I just wanted to note here, is that back on, from May 29th, which I've already updated my chart here. So where we closed from on May 29th to the end of this past month, we closed at 75.42 on the futures here. So that move was a move lower to the tune of about 1.35%, kind of right in that range for the month to date move for the month of June here on the S&P 500. So, and I'll update you here again. We'll look at that a little bit more closely here in just a second as far as how my position turned out last month. And but real quickly, I want to zoom out here and just show you that on a year-to-date basis, from where we closed at the end of last year to where we currently sit here on the S&P 500 is a move higher on a year-to-date basis to the tune of about 9.5%. So, sitting at a pretty good place here on the S&P 500 index, which is again going to coincide with the futures here. But 9.5% higher on a year-to-date basis is a good return, and we're only halfway through this year. So we'll see what the rest of this year holds. But really quickly, what I want to do now is take you over to my position just to update you on how I finished last month, or what my position looked like at the end of last month. So where we closed was 75.42 on the futures contract. So I'll just highlight that right here on my screen. So we closed right about in here, which, as I updated you last week, over the course of last month, I started with my original position, which basically what I was trying to obtain was a market return to the upside with a hedge to the downside. And if you go back and watch my weekly updates, what you'll see is that I made some adjustments over the course of last month, which was basically to close this gap, right? Because this part of my distribution of risk and reward didn't start this way. But the adjustments that I made over here on the right of my screen improved this so that where we closed at the end of last month at 75.42 here on the S&P 500 should have put me at basically a market return on my position here. Now, I'm just going to take this off the screen and I'm going to go over to my time-weighted return tracker just to show you that, in fact, where I did in the month of June this past week was right at about a 1.31% move lower. And you'll see over here on the left, what I track here is basically what a passive position looks like if I had invested in something like SPY in this case. So here's where we closed on SPY. That was a move lower of about 1.32% on the index here. And so you'll see that I slightly did outperform, to the tune of about 0.01%, a passive position on SPY in this case. And so again, this time-weighted tracker, all this does for me is it helps me track my portfolio return, a time-weighted return of my position versus a time-weighted return on SPY if I were carrying a passive position on SPY, which is an index fund that tracks the S&P 500. So again, by design, where we ended up was right in here. And again, based on where we closed, I was expecting to be, 0.01% higher or in line with a market return here on the S&P 500. So the adjustments that I made over the course of last month, all of that worked out the way that I expected it to. Here, this tool is incredible because it's going to help you visualize your position and visualize anything risk management wise as you manage or adjust your position. You can go in here and it's going to paint a picture of your distribution of risk and reward for you. So it's a great tool to help you visualize your distribution of risk and reward on your position. So I was pleased with the way that June played out. And now what I want to take you to is just to give you a view of what my position looks like for the month of July. So real quick, you'll notice here that I did go in and, where my ending capital was at the end of June. Again, that just becomes my starting capital for the month of July here. And I did contribute $1,600 to my account here. So my starting capital is the 201,400 that you see here. So that becomes my starting capital position here on my position right here. And then again, the position that I'm carrying here, you can see on my screen, the core position that I have set up here where I'm combining shares of my ETF. As you can see here, I did add a couple shares to my position because I contributed a little bit of capital this month. And then I do have the contracts here that I'm basically using here to add leverage to my position, but also finance. I'm using the premium that I'm collecting from these short contracts to finance the hedge that I've purchased over here. And so that's the position that I'm carrying for the month of July. Okay, well, that's nice, but what does that actually look like when you actually go and initiate this and put it on, right, and execute the trade? What is that going to look like in terms of a distribution of risk and reward for this month? Well, if I scroll down here, you're going to see that picture painted on my screen. Over here on the left, again, is just a percentage moves on the S&P 500. And so just simple math, if we do move higher, where's that going to put the S&P 500 on a percentage basis to the upside? As well as if we do move lower, where's that going to put us in terms of percentage basis on the S&P 500 futures here? Well, my position or my account here, because of the position that I just showed you that I put on, is going to move lockstep with the S&P 500. Okay. And so you'll see that right now that this position, I'm going to remove this and just kind of zoom out here for you a little bit. Okay, you'll see here that my position is going to look very, very similar to the position that I carried last month. What I want here is a position that to the upside is going to track pretty closely with a market return on the S&P 500. So you'll see here that I'm, if I didn't make any adjustments over the course of this month, that I'm trailing the S&P 500 here. I am giving up a little bit to the upside, but for the most part, it's very, very close to a market return if we do move higher on the S&P 500. And then more importantly, to the downside, if we do see some type of a substantial sell-off, then you'll see that I do have this hedge that kicks in for me here to the downside that starts to help my position, right? Reduce my loss on this position if we do see a substantial move lower on the S&P 500. And just given where the market's been and the volatility that we've seen here lately, I like the hedge that I have here and the way this is going to help me if we do see some type of a substantial sell-off over the course of this month. And just like I did last month, again, I started pretty much with this same kind of gap right here, right? Between a market return and my position that I'm carrying. And so if we do see, depending on, if we do get some type of volatility this month, depending on the price action that we get, what I'll be looking to do is make some adjustments here to improve this part of my distribution of risk and reward here. That's going to be my primary goal, number one. But with any adjustment that I make here, like I did all of last month, any adjustments that I make, I won't be looking to substantially change this distribution from the original position that I'm taking here, right? I just, again, want a position here that's going to give me very closely to, if not better, and I might be able to actually, if we got a lot of volatility over the course of this month, especially early on, then I could make enough adjustments here to actually improve my distribution of risk and reward to where I'm outperforming the S&P 500 here to the upside and the downside. But I'm going to need volatility to help me with that. And so we'll see. My primary goal, though, here will be to make some adjustments here just to improve this part of the position. But all in all, what I can't stress enough is that from the onset of this position, I have to be comfortable with carrying this trade for the entire month as is. Because if we don't see any type of volatility or substantial price action over the course of this month, then what's really important here is that I need to be satisfied with the position that I have from the very get-go. I need to be comfortable with this position if I don't get to make any adjustments over the course of this month. And so I'm pleased with the position that I have on here. And what I'll be looking for now is just some opportunities here to maybe make some adjustments, just to tweak this ever so slightly to improve it and optimize it a little more. So that's the position that I have on here for the month of July. Hopefully this is helpful for you to kind of watch over my shoulder and see how I'm implementing this system and strategy. And I'll hop back on here next week to give you an update based on whatever price action we see over this coming week. So anyways, with that, I hope you have a wonderful week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.